Do you think it's possible to pay your rent using treasury bonds? Or is it possible to pay your child's school fees throughout their primary and secondary education through treasury bonds? Yes, it's possible. How is that possible? Through bond laddering. What is bond laddering? Bond laddering is when you buy different bonds with different maturity dates, so that when you draw a line from one maturity date to the next maturity date, you have a ladder effect. For instance, you could have one bond maturing in 2 years, and then the next bond matures in 4 years, the other bond matures in 7 years, the next bond matures in 10 years, and so on and so forth. So when you draw a line on the maturity date from the earliest to the next maturity date, you have a ladder effect. That is called bond laddering. Now, it is possible to buy or invest in treasury bonds in a manner that the coupons that you are earning, or the coupons that you will be earning, will be timed or mirrored to when you pay school fees, and will be sufficient to pay your child's school fees when the school fees is due. Bond laddering. In this video, I am going to share with you what bond laddering is, which I've already told you. I am also going to tell you the advantages of bond laddering. I'm going to demonstrate to you how you can use bond laddering to pay your rent over the next couple of years, or how you can use it to pay your child's school fees. First and foremost, I would like to thank you so much for those who have already subscribed to my channel. Asante sana. If you haven't subscribed, or if you're new to the channel, please press the subscribe button for me so that YouTube can notify you whenever I'm uploading another video or the next videos. As you can see, the content is very educational. I'm also going to request you to please press the subscribe button. To press the like button if you do like the video, or if you find the video informative. Now, why bond laddering? Why would you want to do bond laddering? There are different advantages of bond laddering. Number one, you spread out your risk. Which risk are there in bonds? The risk of interest rate fluctuations. Remember, bonds are fixed income securities. A fixed income security is a security or an investment where once you have invested, the government will be paying you the same interest amount for the entire tenure of that paper, or for the entire tenure of your investment. Unlike money markets where interest rate fluctuates, or other investment vehicles where the return on investment fluctuates, the return on treasury bonds is fixed. If you invest now and the rates are at 16% on a 15-year paper, for the entire period of 15 years, you will be paid 16%. And then at the end of the tenure, you'll get your principal investment. Those who had invested a few years back when the rates were still 12% or 13% are being paid interest or coupons on their investments at that rate of 12% or the 13% they had initially invested in. So bond laddering enables you to manage the fluctuations on interest rates. How is that? Had you invested, if you had, say, 3 million to invest 4 years back or 3 years back, yeah, when the rates were at 12%, and then you buy a 15-year paper, you'll need to be earning 12% on your investment, even though the interest rates have now increased to 16%. Now, how do you mitigate that risk? By laddering your investment. Those who, instead of buying the entire investing the entire 4 million for the entire 15 years, laddered their bonds and had shorter maturity dates, say 2 years or 5 years and 7 years, can now reinvest whatever the coupons they have earned and the capital they are earning now. That is the money that is maturing now. You know, remember when the paper matures, the government pays you back your initial investment plus the coupon, yeah? So those who are getting their initial investment now can reinvest it at the current high prices. So bond laddering enables you to mitigate the fluctuations in interest rates. It also allows you liquidity. It allows you liquidity. Remember, investments in treasury bonds are long-term investments. You'll need to hold the paper, the investment. You need to let the investment stay for the period of that paper. Should you need to sell it midway, you'll have to go to the secondary market and use a broker to sell for you. Selling that paper is not always as easy, not unless if you had a high interest paper and you want to dispose it. Okay, so if you ladder your bonds in before the 15 years tenor or before the maturity of your longest paper, you would have had other bonds maturing here in between, yeah? So it allows you, it improves your liquidity. Now, another advantage of bond laddering is it enables you to have a steady flow of income. It enables you to have a steady flow of income by having different maturity dates on your different papers, yeah? It helps you to mitigate reinvestment risk. It helps you to mitigate reinvestment risk. What is reinvestment risk? Reinvestment risk is when you have one paper maturing at a high risk, and by the time that paper is maturing, the rates have come low. You have a paper maturing, a high yield paper maturing when the rates are already low. The rates now are at 16%. 2 years down the line, the rates might have come down to 12%. Okay? So if you bought a bond that matures 2 years from now, and the rates have come down to 12%, and you have to reinvest this at 12%, you are going to lose. All right? So how do you mitigate that? You ladder. Instead of having your entire bond maturing 2 years from now, you can have a portion of that paper or of your money. You can buy a treasury bond that matures 2 years from now, another one that matures 4 years from now, another one that matures maybe 8 years from now or 10 years from now, so that as one is maturing and you are reinvesting it, even if you reinvest it at a lower rate, you still have other papers or other bonds which haven't matured and they are high yield or a higher yield. Now, is it possible to use bond laddering or to pay your rent? Is it possible to pay your rent purely from your investment in treasury bonds? Yes, it is. You can take advantage of the laddering to ladder the coupons. Like I have said, laddering bonds is in buying bonds of different maturity dates, such that when you join the dots on each maturity date, it forms a ladder. It gives you a ladder. Now, you can also do laddering of the coupons. Coupons is the revenue you earn from investing in treasury bonds. When you invest in treasury bonds, every 6 months, the government pays you income. The government pays you interest. That interest or that yield on investment in treasury bond is what is called a coupon, the bond coupon. Now, given that it's paid every 6 months, you can invest in these bonds and target coupons that will spread throughout the year, so that every month of the year you have a paper maturing, sorry, not maturing, you have a coupon being paid out to you, such that you can actually pay your monthly rent from your investment in treasury bonds. By the mere virtue of the fact that coupons are paid every 6 months. Okay? So that means if you have a January coupon, you'll expect the same amount in July. If you have a June paper, you'll be expecting to receive the same amount in December. Interest is calculated on your principal amounts, and then it's divided by 2. If it's taxed, tax is deducted, and then the balance of that amount or your coupon is then credited to you or remitted to you, right? So is it possible to use bonds to pay school fees? Yes, it is. How is that possible? By bond laddering. How can you ladder your bonds in a manner that it will enable you to pay your school fees? Is it possible? School fees is paid in the months of January, May, and September. All right? So how can you match your bonds such that you are able to pay school fees in January, you are able to pay school fees in May, and you are also able to pay school fees in September? You can look at this chart. You can target to buy bonds with coupons for November and May, or May and November, so that you use the November pay coupon to pay term 1 school fees. By the time the kids are closing school, or by the time you're proceeding for your Christmas holidays, you have already paid your school fees for term 1. And then from that same paper, the coupon which will be paid in May, you can use it to pay school fees for term 2. That is using one investment. So if by the time that paper with coupons of May and November is being floated, if in the event that you don't have enough money, you can just invest the amount that you have and then time another paper or another bond which will be having coupons being paid in May and November. And when you have it, you buy it. So you can continue buying like that until at the end of the day, the coupons you receive in the month of May or in the month of November, of course it's going to be the same amount, will be sufficient to pay a whole term's worth of school fees. We have already sorted term 1 and term 2. Now how do we sort term 3? In term 3, you can look for coupons, or you can look for bonds or papers whose coupons are paid in the month of June and December. So that you use the June coupon. Remember, term 2 school fees already paid in May, yeah? Now, you use the coupon you're receiving in June to pay your term 3 school fees. And then, because the government will be paying you coupons every 6 months, that is 2 times a year, you'll be expecting the same amount in December. And it's in December where people go for holidays and say thank you for the hard work you've done during the year. So you can use the December coupon to have a stress-free Christmas or to have a stress-free January. I don't know if that makes sense. You can use bond laddering to pay school fees. You can use bond laddering to pay your rent. And you can also use it to meet so many other objectives. Please leave me a comment in the comment section on how you are using or how you think you can use the bond laddering to work for you. Which financial objective do you have, and how are you using the laddering to make it work for you? If you have a question on how you can use the bond laddering to meet your objectives, leave me a comment in the comment section and I'll certainly get back to you. Don't forget to subscribe to the channel or you miss out on other videos.